What's going on, everybody? Liam O'Reilly, Vermont economic realtor with Jerry Riley Real Estate. I hope you're doing well. These high prices, high home prices, and high mortgage rates are causing a further divide between the rich and the poor, in my opinion. And I'm going to talk about how in this video and talk about what's going on. Now, something I wanted to address is in one of my earlier videos, I talked about how mortgage rates were killing the housing market. And I still believe that. And the reason why I believe that is because mortgage rates are manipulated by the Federal Reserve and their actions, where home prices are set by the free market, right? You can purchase a property, somebody can purchase a property at whatever price they want to buy it at, or at whatever price the seller is willing to sell it at. You can sell your home for whatever price a buyer is willing to pay for it, right? That's the free market. If you want to sell your home for $1 million, but there's no buyers there, and there's a buyer at $900,000, then that's what you can sell your home for. The government isn't going to come in and say you have to sell it for $1 million, you have to sell it for $900,000. Compare that to the mortgage market. The Federal Reserve hikes their interest rates. They use their balance sheet to buy mortgage-backed securities. And now, during quantitative tightening, as they've been rolling off their balance sheet and they've been hiking their Fed funds rates, that has caused mortgage rates in turn to increase, right? You can't go out there and get a mortgage for a 3% rate anymore. Pretty much you're going to be going out there, you're going to be getting a federally backed, or at least, government backed mortgage, right? That's going to be sold through Fannie Mae and Freddie Mac through the mortgage backed security product. And those mortgages are essentially influenced by the Federal Reserve's rate. It's not a free market mortgage market. So that's why I say that the interest rates are what's killing the economy, because that is what the Federal Reserve has manipulated through for the past 10 plus years during their quantitative tightening, and they continue to or their quantitative easing, excuse me, and they continue to manipulate through their quantitative tightening by raising these interest rates, and that is really what's causing affordability to be so low. Now, people are right where they say that home prices are high on a historical level, but mortgage rates on a historical level are low, or at least relatively normal, even at 7%, which may sound crazy to people who were looking pre-pandemic, or people who have locked into a 2.65 rate. And that is all true, but the reason why prices are so high is because mortgage rates were so low during the pandemic, affordability was so high, and now that those mortgage rates have shot back up, affordability is low, but supply is also low. For a variety of reasons, right? We've talked about it on this channel, but a lot of people want to buy homes right now. There's a huge buyer pool and a huge demand for homes. And although that demand has diminished by these higher mortgage rates, supply has diminished more than demand. So demand still outweighs supply, which is keeping supply low, keeping inventory low, and keeping housing prices stable, which is, in turn brings down affordability and exacerbates that divide, in my opinion, between the rich and the poor. Obviously, there's other influences like inflation and things like that, but this is a big factor as well. So let's get into our first article here by Axios. Leaves will fall, housing prices won't, experts predict. So, what they're talking about here, optimistic housing experts predicted the housing market would be better for buyers in 2023, but a lack of supply and record high mortgage rates have forced would-be buyers to the sidelines, right? And now this is forcing buyers to the sidelines for different reasons. There are buyers who can no longer afford to buy a home because prices are too high, interest rates are too high, so they can't afford to purchase a property. But there's also buyers who are on the sidelines who can afford to buy and are just choosing not to because they don't think it's a favorable time. Maybe they're afraid that home prices are going to come down. I talked to a lot of buyers who say that they can't afford to buy. Maybe they have the cash, maybe they have the income to afford to purchase a property that they would want to buy, but they are hopeful that there's going to be a better buying opportunity in the future, right? And so, that's kind of what's going on in the housing market. But at the same time, the homes are still moving, and we know that we go over to Redfin here. We take a look at the median sales price. It's staying pretty stable. This orange line here is the median sales price on a weekly basis for the past. The orange line is 2023, and then we see below it the red line is 2022, blue is 2021, gray is 2020, and we can see that the median sales price It's up year over year, but it's also staying relatively stable over the month over month basis or the week over week basis. Sure, it's going down slightly. It is, but the bottom is not completely falling out of it because there's still a market. There are still people here who can purchase properties, but affordability is relatively low, and we're seeing that because traffic is down throughout almost all sections of the economy, and obviously affordability is low with the higher rates. Um, Something I wanted to focus on. We talk a lot about supply. Excuse me. Supply is what is, keeping housing prices up, right? There's way less supply than there is demand, or maybe not way less supply, but supply is extremely limited. And so, although demand is low with this low affordability, home prices stay high. But supply is likely to continue to remain low in the future, in my opinion, because at least I don't see where the supply is going to come from. What we're looking at now is the National Association of Home Builders. They have this index of their sentiment, so how they feel about the overall housing market and how that reflects to their that is a really good correlation to new home builds, new home starts, and new inventory coming to the market. And right now, the National Association of Home Builders is down at 45. So they're really not confident in the overall home building market. We can see here it's this blue line is the index right in the middle of this chart here, kind of on the right side. And that's where you get the 45 number. It's been trending down for the past few months. And a big reason for that, the green line right before it, if we look at this chart, is the traffic, is buyer traffic coming to new home builders. And why is this important? Why are home builders so important? Well, if sellers aren't going to sell their home because they're locked into a higher interest rate or there's not great options for them, then home builders are what's going to bring more inventory to the market. And that's what we've seen over this past year. Because supply has been so low, we have seen home builders take up a larger share of the overall housing market. But because they can't bring inventory to the market at an affordable level, and because buyer traffic has decreased so drastically, they're getting scared. Their index is low. They're pulling back on building, and we see that in the Fed's data here. If we come back over, that's sales price. This is multifamily. We take a look here. New privately owned housing starts, total units. So this is single family homes. We see that it started to drop off, right? It was pretty low, and we've talked about this in other videos. It's been low for the past 10 years or so. Not many, privately built housing starts have been coming to the market. And then we take a look at what's going on recently. We see that obviously we had the spike here in 2022, and then things started to decrease as rates hiked. And now we see about a decrease of about 200,000 housing starts month over month. I don't know if you can see that in the far right corner of your screen there. Maybe 150 to 200,000 going from 1444, 1,444,000 or 47, excuse me, down to 1.283. So home builders are really pulling back on traffic, which is going to, obviously impact the amount of new homes coming to the market and the amount of supply that will be there. And that largely has to do with the affordability crisis, right? Things are less affordable. There's less buyers out there looking. Now, the last thing I wanted to point out is we talk about where inventory is coming, and I wanted to bring up foreclosures and foreclosed properties. Now, I have this highlighted, but what we're looking at here is the U.S. foreclosure activity or the U.S. foreclosure data by Adam Research. And we take a look at what they say. Foreclosures ticked up month over month, which you would think would be a positive sign for supply, would be a positive sign to bring supply up and home prices down. But if we take a look at this highlighted section here, lenders repossessed 3,000 homes through completed foreclosures in August, up 1% from last month, from July, but down 15% from last year. So sure, foreclosures are starting to tick up a little bit month over month, but it's still down significantly from 2022 data, which in itself was a very low year for foreclosures. So there's not that many foreclosures happening like we saw in 2008. So how is this creating a divide between the rich and the poor? I think, affordability is really the best index for it, right? Affordability is really low. It's really expensive to buy a home right now by almost any metric you look at it. in nominal prices, home prices are high on historical data, like on historical terms. Even adjusted for inflation, home prices are high. At the same time, mortgage rates are high, and the monthly mortgage payment for the median sales price is at a historical level, right? It's about what I think Redfin has it at 2,600 or something like that, 2,700 a month, to if you're including principal, interest, taxes, insurance, just to purchase the median priced home with 20% down, right? That's very expensive. That's hard for a lot of Americans to do, and so I really what that means is that the people who are out there purchasing properties in this housing market are the people who can afford to purchase the properties. If you can't afford to purchase it, and I don't blame you if you can't, or or you're choosing not to. Really, what it is that you can't afford it. You can't afford the property, right? If you think about this in terms of cars, not everybody can afford to buy a Lamborghini. Obviously, it's a very expensive car, and you have to be very well off in order to purchase that car. But basically, what's happening now in the overall housing market is even low-priced homes, even condos and starter homes are becoming as unaffordable as that Lamborghini. And so as it becomes harder and harder for people to move into the housing market to build equity through home ownership, and as home prices stay stable, even though yes they're trending down slightly, it doesn't look like the bottom's falling out of it. And if you're renting, you're putting that money, giving that money to your landlord as opposed to building equity in your home, taking the tax benefits of owning a home and using that to kind of piggyback off your wealth journey. I think a lot of people struggle to build wealth and will continue to struggle to build wealth without being able to access what's now a relatively unaffordable housing market, and looks like it's going to continue that way for the foreseeable future. So anyway, Liam O'Reilly, Vermont economic realtor. All my contact information is in the description. If you're looking to buy or sell a home anywhere across the country, reach out to me directly. I would be happy to help you. Other than that, leave me a comment. Let me know what you think about this video. I love hearing from you guys. I love knowing your thoughts. I learn a lot from you folks. I hope you got something out of this video, and I'll see you guys in the next one.